Welcome to Accelerated, a series of conversations with fintechs and bankers discussing insights into partnerships and tips on accelerating growth. This series is brought to you by the Venture Center and the William Mills agencies. We have been working together to feature collaborations that are advancing the financial technology industry. I'm Wayne Miller, the Executive Director of the Venture Center. Let me introduce Heather Suggs.
Thank you, Wayne. Today, I'm happy to share that we are speaking with Venture Center alumni and WMA client Agora. And we have, Agora is a challenger bank technology platform for community banks and credit unions, and Seattle Bank, $708 million bank focused on bespoke and white glove service for commercial and high net worth clients. So welcome, Jayson and Arcady.
Thank you for having us.
Jayson, Callies, Chief Information Officer of Seattle Bank. I've been with the bank for about 4.5 years.
I'm Arcady, Lapiro, CEO and founder of Agora. We are a middleware solution that brings challenger bank technology and products over legacy core. And we're just here for community banks and credit union.
Good deal, Heather. Thanks for that, and welcome, Jayson and Arcady. Let's jump right in. So both Seattle Bank and Agora have sort of niche business plans, right? What I'd like to do, Jayson, is actually start with you, and if you could give us a little bit of background and sort of understanding about the niche that you folks perform in as a banking entity at Seattle Bank, and maybe give us a couple of minutes about kind of your strategy and plan as it relates to technology and what are the things that you're doing specifically for your market.
Sure, absolutely. So a little bit of background and history for us. So Seattle Bank, yes, we were once one of the largest mortgage lenders in the country. That side of the business actually just celebrated our 77th anniversary. But back in the early 2000s, when there was kind of the mortgage lending crisis, and then also mortgage lending itself really became commoditized, the bank decided to make a focused shift. And we decided to collapse all of our branch network into a single location and then focus on the needs of the high net worth and the ultra high net worth clients. During that transformation, it became very apparent that that the products and services that we're offering through our digital banking platform we're not going to meet the needs of that client base. And so, after kind of working with our core provider, it was really apparent that we were a small fish in a big sea, in a big pond, and that the core provider really wasn't going to make the customizations that we needed to serve that market. And so that kind of began the digital transformation for us, and us for looking for partners and vendors, and doing the build buy partner strategy. So that we could really go out and meet those needs, and that really kind of pushed us into the open banking type of market, so that we could find the right partners and leverage technology to meet those needs, since we are a single location in a downtown high rise. So, yeah.
Jayson, thanks for that. I guess a couple responses to that. One, happy 77th. I don't know what do you get for your 77th anniversary?
I don't know.
Gold or platinum.
Lucky sevens, though. That's good.
Yeah, there you go. That's awesome. And I mean, that is more the rule than the exception, particularly in the world that we deal with, which is a lot with community banking, right? Where we see third and fourth generation bankers. There's a high likelihood that the person we're talking to as decision makers got an oil painting in the boardroom, right? That doesn't happen very often. So secondly, I have to ask the question, just because I'm personally curious, is you must have a few of coffee and technological wealth that are part of your client base. When you're in Seattle, I would imagine that some of those high net worth individuals have been people who have generated that wealth probably in the last 20 to 25 years. Is that a fair assessment?
Yeah, there's definitely a large market and client base that it is that. And then we also, of course, since we're in the Seattle market, we have some really good ties with a lot of those local tech people directly. We have a technology advisory board that with people from Microsoft and other startups and different firms that have sold to Microsoft or other companies. And so yeah, we've got a pretty diverse client base in the tech community. We have investors. Some of our major investors right now and shareholders, and even some of the board members, were early investors in Expedia and Amazon and some of those other big local companies. So yeah, there's a lot of good names there.
Have they had an influence in your having to move to a more digital existence, a more digital journey for them, as a result of the fact that they're probably pretty technologically savvy people and kind of think a little bit more cutting edge?
I would say definitely I don't know if that I would use influence as the word, but they've been very good proponents of moving in that direction. So it's one, I've come from I've worked at a few other banks, and a lot of times you get to the C level and they're very risk averse, very technology averse, that type of thing, kind of the traditional mindset. And our board is very pro technology. Like I say, they're all heavy investors in tech themselves. They see that as the move forward path. They see that as the future. So it is great for me in my position, to be able to have a board that's behind anything that I want to bring to the table. They ask amazing questions. They dig into the details because they have that mindset. So it really helps us at the bank with our initiatives to have that type of board and that type of senior level management.
That's awesome, and I'm sure that, like I said, that's really contributory to the direction. And thanks, you kind of gave me a good segue there as well. It's been an interesting year and a half, as we all know, and it looks like it's getting more interesting, and certainly here in Arkansas. But we're not real happy with the direction we're moving. But obviously, these times have inspired, created, forced, motivated us in the banking industry and financial industry to be more, adoptive of technologies and new technologies as it relates to the changes that have occurred during the last year. If you can, give me a sense for how that's impacted you, particularly in your niche business. And Arcady, I'll ask you this question as well when we get to you, so think about it. But what do you see as the future here, and how has this sort of helped to really almost created some forced adoption, if you will, in terms of what this last year has demanded from us, a year and a half?
Oh yeah, for sure. It's kind of started for us with PPP, right? So we were able to really take advantage of that. We actually were not an SBA lender prior to PPP. So for us, we went out and got the necessary requirements to do that. We worked with a fintech vendor. Within 2.5, 3 weeks, we actually spun up a PPP portal and started accepting applications. So that was a really quick win for us. That really showed how fast we can move with technology and how we can partner with other outside vendors to make some really cool things happen and service our clients. And I think at the end of the day, I think 95% of the people that we provided a PPP loan to were not existing clients prior to that. So it was very successful for us. And I think in general, COVID, of course, really pushed digital transformation, not only at the bank level, it's really our clients. So our business clients, they needed to actually push their digital transformation forward. And because of that, and because of them realizing, hey, we can do some really cool things with technology, they started requiring more of the banks, right? So I think it wasn't necessarily banks pushing it down. I think the clients kind of also pushed it up. So it was a very interesting time for sure. And that just really accelerated everything. And now, new fintechs are popping up every day with some really cool products. So it's pretty awesome.
Looking forward, and again, that has been your comments relative to 95% of the loans that they wrote for PPP being a non-SBA lender. That's a pretty common theme in the community banks that we talk with. I like to suggest that they were the ventilators, if you will, for small business during COVID and to create those opportunities. There were some obviously underserved who were more challenged with that, et cetera. But as you look to the future, you've captured these new customers through this challenging time, et cetera, and through COVID and what have you, and the impact there, and helping them to sustain their business, keep their people paid, and keep the rent and the utilities on. How are you looking at the future now? Because one of the big challenges we see is, what are the technologies, what are the relationships, how are they going to be able to retain these customers moving forward? How do you maintain your relevance to that customer, as we start to ultimately get out of COVID? Do you have a plan for that? How do you see that?
Yeah, so like I say, a lot of those clients, were coming from, unfortunately, I'm going to say this, they were coming from a big bank. So when PPP first happened, all these clients, most of them, probably out of that 95%, I would say 70% or more of those came from one of the large banks where they had applied for a PPP loan. They didn't get a response as soon as they needed to, or within a couple of weeks, or whatever that looked like. And then, they came to us looking for that assistance. And so I think we gained a lot of relationships through that itself. And then as far as maintaining, we're white glove niche bank. We really do the white glove approach. So a lot of it really has to do with our service and some of the product offerings that we do have. Entitlements is a big one for a lot of businesses, as far as making sure that the right staff in their accounting departments in different areas have the right permissions to the right things. So there's some certain features that we have in our actual tech set that allows us to really manage those clients pretty well. So a lot of those people move some of their balances over, tried us out for a little bit, and then once they felt that we had the products and services, and more importantly, the service itself from our salespeople and our back office support, once they felt that was all there, they've really become loyal clients.
That's awesome. So retention has been high, it sounds like, which is
Yeah,
really
it has.
good for you. When you start to think about niche banking, obviously, we see these models, to some degree come and go over time. The banks ultimately are sometimes acquired, particularly in the space and what have you. But so how do you look at how you manage that technology in your niche segment, and lead me into the answer to how do you make that decision to build or buy?
Okay. So for us, a lot of it really has to do with, we have a client need. We have people coming to us with, certain expectations. And, for us, build or buy really has to do with a lot of things, but speed to market is one of them for sure. If there's already something out there, why reinvent the wheel, right? So that's one of the deciding factors. But of course, a lot of times where we really start at security. So we perform a kind of like an initial risk assessment of, okay, what's the data that we're actually, going to need for this type of product or service or whatever it is. And then we move there into, okay, depending on that data, do we need to own it? Can we partner? Can we buy? What's that look like? It also, of course, resources comes into play, for build, buy, or partner. Do we have the right resources in-house to actually build this? If we do, great. If we don't, that's another thing. Again, speed to market, cost. At the end of the day, some things that we could build internally that are going to be much less expensive in the long run, and we can iterate better in the long run if we build it ourselves. But other things, no. I mean, it makes a lot of sense to actually go with a fintech partner or some other vendor. So there's a lot of pieces there. IP, of course, everybody wants the intellectual property there. If we're doing something new and creative, we typically want to own that. That doesn't mean we're still not going to partner with somebody, but we typically want to at least own a piece of that. But if it's, like I say, if it's something that's out in the market, or something like what Arcady has going on with the Teams app, I mean, that's an amazing product. Why would we need to build that when it's already sitting out there ready to go? So yeah, there's a lot of decision points, but strategic fit and then just speed to market are two of the big driving factors.
The speed to market is a reoccurring theme through a lot of your answers. And I think that's a good segue into Arcady and what you're doing too. So if we want to talk a little bit about how fast community banks have been and reactive in providing the services they have over the last year and a half, and you have all the features and functionalities that you need to compete, where do you both predict, and we'll start with you, Arcady, but where do you both predict the future of that speed to market demand being, and how can we continue to succeed?
So the question is like a speed to market. There's two things in speed to market. There's a speed to market to answer an internal need from the existing bank, a community bank, or because there's an external pressure. So the first part, it's like if the timing is only relevant to the bank, the answer is it's relevant to the timing of the bank. So whenever they want, whenever they're looking for to deploy, so there's no time of speed to market. Regarding the pressure from the market, there's a real pressure from the market, which is coming from Challenger Bank. And the growth from players like Chime, like Current, which are just doubling almost their customer base every year. Current went from 2 million to 4 million in a year with the COVID. So it creates pressure for community banks. So the time to market is very crucial. And there's another data which I presented a few months ago on YouTube, which is showing that the growth of Challenger Bank is going to keep more or less the same pace in the next 2 years. So time to market for community banks today, it's in the year and a half that is coming. It's not in 2 years, it's not in 3 years. That means in a year and a half that is coming, they need to adjust with a digital transformation, either on niche product or overall on the entire offering. But time is now. Time to market, it's between now and a year and a half.
Yeah, I think kind of to back up that I think I read a Cornerstone, maybe a Ron Shevlin article the other day regarding, Chime and some of those other banks, the Neos and Challengers, and the market share that they're pulling. And then also the consumer and retail side of the big three banks and what they're losing. And also some of that money is not going to Chime and the Neos and Challengers. Some of it's just going right into other payments platforms like a Zelle or a Venmo or, those other places where people can start putting their money and performing transactions. So there is a lot going on in the market right now. And you really got to get ahead of it if you want to stay around. And I think, kind of to your point, as far as the niche goes, Arcady, I think, most community banks, they need to lean into that niche right now. They need to really lean into that and provide the products and services to their client bases that they need. So now's the time to really start doing that so you can, build out loyalty.
Yeah, so I just want to jump on what Jayson just said about the niche market. And it's something which is crucial right now. If you take a look at what's happening right now with Bank of America, there's a recent article from a Cornerstone advisor by Ron Shevlin. It's on Forbes. This article is explaining what's happening to Bank of America. They used to have a huge growth on digital through digital channel, and now they're bleeding customers. And it's not just Bank of America, Wells Fargo and Citi is the same. And they're looking eventually to reposition on niche market because that's where it's coming. So you have New Challenger Bank on niche. And just very high level, do we think that a single community bank can have the same budget than Chase to run after all the market, every segment? No. So that's one. Do they have a budget? No. Do we think that they can expect from their legacy core, the big names, to be fast, reactive, and bring a solution in the next 12 months? No. So the only way is to go after niche segment. And to go after niche segment, you need the right technology. So as Jayson said, either you build it, or you buy it, or your partner built it. It's very complicated. So
how niche can a community bank get at this point, Stage? Because we're seeing some pieces come out there that are extremely focused. What are your views?
I'm very pro niche, to be honest with you. I think, there's a lot of banks out there right now that they're running off of maybe ethnicity or a cause or something like that. And I think for some of those, there's definitely a cap on their growth, depending on what they're doing there, right? But I also think that there's an opportunity for a lot of these banks that have the right tech stack to have multiple digital brands and multiple niches. And I think you're going to see some of that happening in the market too, where you have a really good bank, really good infrastructure that are going to go out and throw 3 or 4 different brands out there and continue to have that growth because they're providing, services to different markets. I think we're going to see some of that over the next couple of years as well.
But one thing to add on that, it's like on the niche market, there's different angles. Of course, there's a brand. So it's marketing, it's a website, it's a communication, but if you need a product behind the scene, and the product cannot be the same one. And I'm going to give an example. It's not a product, it's a commodity, it's onboarding. You're not going to onboard an unbanked or a non-resident or a small medium business or a young person who has no data accessible, like a credit score, etc. You need to have a different tools for this kind of market. So this is just one feature, which is onboarding. And then when it's about the product itself, it's like you need it to do it in different ways. Some end users, especially the teenagers, they would like to be more digital with virtual card, etc. Virtual card, mobile wallet, things like that. So you need really, it's like you need the brand, but you need the backend, and the backend to be able to build a product, and to be a product that has several iterations, several releases. So it has to be a real time and flexible to to be able to have releases.
Support.
I'm sorry. Yeah, I absolutely agree with you, Arcady, that like I say, if a bank's they have to have the right tech stack to be able to service multiple niches if they can manage that. There's a lot of resource, their considerations when somebody's going to do that. But I definitely think there's going to be some banks that go down that path.
It begs the question, Jayson, how do you decide to do business? What are the criteria by which you decide to select working with a character like Arcady and his company?
So, kind of like I spoke to earlier, a lot of it has to do with, the strategic fit. So at Seattle Bank, as we cater to the high net worth, ultra high net worth, but we're also in currently working with Plex, right, with Google. So, that's going to take us completely down a whole different path, a whole different segment and demographic. It's going to be a consumer play, right? So along with that, if we're already going to step down that path, we're looking at, okay, are there other areas where we want to do the consumer play or more national play? Because we're already kind of moving that direction. So I think, as far as those partnerships, it really has to do a lot with the strategic fit of where the bank is headed and what they want to do when they grow up. And then level of risk, of course, that's another, big one for us, and a lot of that has to do with the maturity of that vendor. So, we typically see 40 or 50 fintech vendors that come in, and a lot of them are early startups, and they really don't understand the regulatory landscape. And so there's a lot of education that we do with some of these early and young startups. And so, depending on the level of risk of the solution that they're providing, we may choose somebody else over them just because they're not mature enough, or we don't think they have the chops yet to kind of bring that product to market safely for us, at least for our risk tolerances at the bank. We also look, of course, at the management team. That's a big deal for us. And then also their overall strategy. A lot of times these early young startups will come in as well, and they'll say, here's our product, but we can do all these other things too. And for me and the management team, that's a lot of times that's a red flag. If they start promising they can do 15, 20 other features, it's like, you guys, your focus isn't there. Right. If you're saying this to every bank that you're talking to, there's no way you're ever going to bring this product to market and it's going to be successful, because you're going to have too many people on your teams going too many directions. So there's a lot of different variables that come into play there, but strategic fit is definitely the number one. And then level risk and maturity. And then also, a lot of times we'll invest in the fintechs and some of these early startups, but we wouldn't necessarily partner with them because maybe they're not a strategic fit right now, according to what we're doing. But yeah.
Great segue to you, Wayne, because with all the list that Jayson's provided for us there, how do you vet companies like Agora that come into the Venture Center?
We still go with the blood test and the background check. No, just kidding. Which Arcady came through with flying colors. I think it's our approach isn't a whole lot different than Jayson's. Clearly we have to ensure first and foremost that the companies that we bring through our programming are providing solutions that are relevant to the needs and concerns of the community banks that we obviously support as part of the ICBA. So understanding the problem sets is our first, the first part of the challenge. Once that's done, then it's a question of finding the best solutions. I always use the metaphor that, we see a lot of pretty horses, but we're looking for the right jockeys. And that's the key for us, is we really want to find the founders who have likely done this before. And Jayson used the term, who have the chops, right? Who have done this before and who, understand what it takes in a highly regulated environment. The other thing is we like to see that they have some revenue. So, Watson said it pretty well, nothing happens until you sell something. And so that is important. And so obviously when people are buying your product or services, they are for Arcady, that's validation that your solution has meaning. And then it's a question of size of market. How are they funded? How's the team built out, and who do they have for customers? So that decision process for us is not really a whole lot different than it is for the bank, because ultimately it is the bankers who are buying these solutions and who are exposed to these services like Agora and others, Heather, that that are clients of William Mills, et cetera, like Tesla and what have you, who are the ones that they are the end user. They are the real customer in our world, along with our fintechs, obviously. So Arcady, one of the things that's changed a lot in the last couple of years is this concept of open banking. Love to hear your thoughts about that, why it's important, and what you see happening in the world as it relates to that.
So that's a good question. So you mentioned about just before about the managers of fintech, what they've done in the past. They already did something in the industry. So I'm going to rebound on that and to connect it to open banking. So I built myself a challenger bank 2 decades ago. So I'm based in New York. Agora is Atlanta headquarters. I'm originally from Europe. Back in 2000, I built a digital bank. So today we're called Challenger Bank. And we grew to over $20 billion client asset. We made it profitable within 4 years. Chime, for example, after 7 years, still losing $100 million a year. They have 14 million customers and maybe $5 billion deposit. So when I'm talking about open banking, it's open banking by definition, by essence, is coming from Europe. And right now, different zone we are in the world, like the US is looking at Europe, the Middle East. Right now, the Middle East is working on an open banking strategy globally, locally, sorry. So what is the meaning of open banking and how people are seeing it? So the best example of open banking in the US is Plaid. So basically it's connecting, it's a plumbing connecting, giving access to data from banks to fintech, and to move data, and to push money, to move money. But that's just one piece of open banking, because around that you need the entire ecosystem. So once you have access to data, once you can move money, you need the infrastructure also to handle it in real time. So basically, and the key thing, it's core banking in real time. And most of the existing big players, big core banking are not in real time. So open banking is the future of a banking. Chase participated in the extension of the Series D of the round of Plaid. So Chase, JP Morgan invested into Plaid. Few months ago, Jamie Dimon in his newsletter to his shareholders really attacked Plaid by saying they're stealing our client, they're selling our data, they're illegal, they should be banned. And a few months after, he's investing into this company. The same way he did with crypto. He was banning it, and then he adopted it in a way. So what is Plaid? How do they describe themselves? They describe themselves by the infrastructure, which is connecting 11,000 financial institutions to financial apps, to connect these apps to this financial institution and to move money. Who are these 11,000 financial institutions? Credit union, community bank. What does it mean? That means having access to their client, their members, pulling the data, and ultimately moving the money out. Huge alert. So when I say that, it's like before there was a red flag for community banks and credit unions to move fast. This is the ultimate red flag. And what do they need? They don't need they won't be able to block Plaid because it's history already. What they need is to be able to provide themselves similar products, similar features than external providers. And that's exactly what Agora is providing. But this is a huge red alert now. This is the ultimate one for community banks.
So
what do you think? I don't know. What do you think, Jayson and Wayne on that?
Yeah, so I was going to ask you, I understand where you're coming from for sure. So what do you think though about, a lot of the banks have fintechs that, they use Plaid as the back end, and there's a lot of benefit for banks in using Plaid as well because of the access to the data, especially around like KYC and other elements that banks have to do for onboarding clients and different things that we do. What are your thoughts around, the benefits of Plaid for banks? So, or do you think there are any?
They are, but who is benefiting the most? So once again, coming back, if you say a bank can leverage Plaid, of course they can, but for that they need to have the right platform on the other side. You need to have you need your platform to be handled to be an API platform. When I'm talking about you, it's either your core or your middleware that you create. So one, you need to have an API platform to connect to Plaid and to pull the data. Two, you connect the data, but you need to handle the data. whatever the data is transactional, QAC, QAB, whatever, but you need the platform to handle it. It's a huge roadmap for community banks, huge one.
Yeah, I think for me, as far as open banking, I have a little bit different thought on it. And that's just really more just coming from the core provider's perspective of open banking and what happened over with PSD2 and over in Europe. And then the early adopters of some of the core providers there that are bringing it to North America, right? So for us, open banking is more about us being able to provide the products and services to our clients quickly, at speed, and have the ability to actually build our own things. So for years and years, a lot of the core providers, of course, had that middleware layer that sits out there, but they have that under lock and key and tight controls, and the integration process, of course, of third parties when you wanted to, as a bank, want to bring those on was long and arduous and expensive. And so for me, the open banking more has to do with, the core provider providing an API stack that actually has a dev portal, that has a sandbox, that has an area where not only can the banks get access to it to go build and develop things, but all these fintechs can go out there. And, of course, we chose a vendor that has a marketplace. That's what they're trying to build, is an actual open banking marketplace. And we really believe that that's the moving forward path. And that's where all the core providers will be in 4 or 5 years, is they're all trying to scramble and build that same type of infrastructure now, because they see speed to market as key. They can't build all this stuff, all these niche little things for the community FIs. And so now they're opening it up for everybody else to start doing those things, which is great. It's great for the consumer. It's great for the banks.
Jayson, you mentioned at the beginning of this conversation that as a community bank, you don't want to feel like a small fish in a big pond.
Mm-hmm.
So with this type of marketplace, do you find that you're making more requests of other fintechs to be involved and to join in, or are they already there? What's happening most?
Yeah, we've definitely been bringing fintechs to the portal, and since there is an actual sandbox there, and it takes you can go out there to the site, log in, say, hey, I want a dev account for the sandbox, and you have it within the same day, and you can go out there and start playing around and building a product. And then, once you're ready to launch, you coordinate that with that core provider and go through some security and some other app things, and get your product out on the marketplace. The other advantage there too, though, at the marketplace, as far as speed to market is, back in the old days, if I wanted to go out and implement a new digital banking platform with my core provider, that's going to be a 9-month to 12-month process, whatever that looks like, even though that core provider might have already brought that same fintech on board for 15 or 100 other clients, right? It's the same long process. Well, what's nice about the marketplace is you go out there, you select the product that you want. They've built it once for that core. And so all the other banks that are on that core, and possibly some other cores, can just go out there and select a button, say, this is the one I want. And then the spin up time is typically weeks or maybe a couple months versus, many, many months, and, the arduous process that it used to be. So that's where we really see an advantage right now in the marketplaces. It just really is the core providers that are starting to open those things up for their banks and for the fintechs, really.
So it's truly the advent of APIs that has helped create that activity and made it so much easier, where you don't have to ask your core for that $500,000 implementation of Agora, right?
Yep, absolutely.
Basically, we can pull in real time data from the Finastra score. That means Seattle's end user customer, assuming the end user is providing his consumer ID, his client number. We can pull in real time the data. We can prefill the application. We can connect right away his bank account, his checking account, to have access to his balance. So, for example, Plaid, when you connect an account with Plaid is connecting, checking that there's information, and pulling it. And then after that, they can push or pull money, but it's going to the classic ACH channel. With our integration with Finastra, it's peer-to-peer. That means we don't even have to pull. We're pulling money, but it's peer-to-peer. So that's a good example, I guess, of open banking with a core. How a core is modernizing itself with open banking, and we have leveraged it. And the other core are going into this, the three main ones, Jack Henry, FIS, Fiserv, are going into this same direction, but with different timing.
Well, I think this is a conversation we could probably have 3 different settings and recordings about. It is really good to hear from you guys. What would you like to add as we have to wrap up just for time constraints that we haven't touched on yet?
Yeah, for me, I think, in general, a build, buy, and partner approach is the right move forward path for every bank today, especially the community FIs. You really have to just figure out which piece you want to do for what type of solution you're trying to provide to the market, to decide whether you need to build it or buy it or partner. But there's lots of opportunities out there. There's lots of really great ways to enhance your product offerings to your clients. And I would just say lean into your niche, or go out and try to find new niches. I mean, whatever you need to do to stay relevant. But yeah, in the next 5 to 10 years, there's going to be a lot of change in the industry, and I think there's going to be a lot of consolidation. So if you want to get ahead of it, now's the time.
Thank you, Jayson. Arcady, how about you? Anything to add?
I'm on the same page. It's about Venetia. I had a good example of it. I heard that there's a financial player in in Sweden, which found an amazing niche, which is insurance for dogs, and they're killing the market on insurance for dogs. So I'm not talking about Japan. Japan, they're crazy about dogs. But really, it's like really there are a lot of niche. You can create your own niche. We should announce in the next few months the launch of that we're going to serve 2 challenger banks, which are on niche, which are totally untapped. It's especially in the US. US is so big, so huge in geography, in terms of people, of demography. There's so many things to do on the niche market.
Good stuff. Well, guys, thank you all very much. And Heather, I'll let you close things up.
Right. Well, it was great spending time with you both, and we will continue. I like the teaser of the news coming up in the future, Arcady. We'll continue to follow and see what comes down there with those new banks. Jayson, thanks for your time. Very insightful as always. And Wayne at the Venture Center, it's always great partnering with you.